as something different to talk about, I wanted to actually look at the 10-year Treasury note. I was first looking at this morning when, if we go just to, let's see, if we go to this morning, this was when Mario Draghi was speaking, and we saw that the price of the actual note jumped nearly 1.25% in a matter of minutes, and from there it continued higher. So I'm wondering if we're actually starting to show some signs of topping, and I'm just going to take a quick look at it first. I know that there's a couple other analysts that think that we're close to topping, but I just want to do a couple studies. So first, I want to show some different divergences that I'm seeing. So just changing my settings here so we can actually make the chart look better. There we go. So the first thing that I'm seeing is in the daily chart. This is the futures for the 10-year bond, and the first thing that you probably already noticed if you've been watching Traders Base enough is that we have this negative divergence right here. So we have the price making new highs while the RSI is actually making new lows. So there's our first one right there, and you see there is our second one right there. So are we getting close to topping? Well, let's actually take a look. It might just be a short-term thing. So if I go to my daily chart and I move back to, let's say, a 3-year chart and just do another daily chart, when was the last time this happened? So if something became overbought and then it diverged, I see a point just about right there, and we see that it declined after that. Specifically looking from here, we have a couple different divergences, and then if we go back again, this one looks a lot more like the one that I just showed you, where we had a top here. Prices kept advancing for the bonds, but then the RSI continued to decline, and then after that we had a decline from, let's see, 128 to the ultimate low about 117. So it could be pretty significant, seeing how spaced out these two are and seeing how spaced out these two are, and also seeing that the actual RSI is topping out near this 60 level, which is normally indicative of an impending downtrend. So if you want to get into bonds, basically I'm saying it might not be a good time right now. So now let's actually look at a longer term chart and get rid of some drawings. So first, you see we once again have this making new highs and then making new lows in the RSI. So we already have a weekly divergence right there. Then if we go back over here, we have, once again, and I already showed you this on a daily basis, we have another weekly divergence right here where we're making new highs but making lower lows here. And then of course is the one that I already showed you. But I want to go into an even longer term chart. So let's go to a 10-year chart if the data is actually available. Let's see, we have back from 2004, and let's actually make this a monthly chart. And there's our chart right there. So here's what we can actually do. We could say that perhaps we're actually seeing a divergence signal all the way from here down to here. Now, is that actually going to be a reasonable thought? Well, maybe. But you're going to have to actually consider the long-term ramifications of a reversing trend, which would be like, you know, credit risk, fiscal cliff, etc., etc. So I'm not going to talk too much about that one. But the one that does look pretty darn reliable right now is this daily and even weekly negative divergence right now. So we want to look for a possible top coming. And if not, I don't see any patterns at this point, so we could just call the 133.28 zone as a sell zone. Alright, thanks for watching, and don't you go buying treasuries yet. See ya.